Hey, good afternoon, everybody. Right here, we're looking at the September crude oil chart. As you can see, this line here is going to be your downtrend that extends from the May highs to the highs we had from last week. Our uptrend is going to be from the May lows to the early July low. And the retracement, just so you guys can kind of calibrate yourselves, is going to be retracement from the May low to last week's high. So we actually did sell the crude oil today at 76.50. I'm sorry, 81.50. Really that was looking for a retest of the lows from the days that we were making our highs last week and a retest of this day's high right here. So we did that overnight, and what we're going to look for here is if this market cannot take out last week's highs, there really doesn't seem to be any additional bullish news that's on the forefront of everybody's mind at this point. A lot of things are overbought right now in the commodity world, and the dollar is extremely oversold at this point, as you can see by this chart here. So we're also kind of playing off the dollar at this point now. It's definitely in a down channel, as you can see, and then this trend line here is just more of a short-term downtrend that we've established after accelerating a little bit more to the downside. But something that's interesting on this dollar rally that we had and this dollar decline is it's happened roughly in the same time period. So this was a move from early April until about mid-June, and then from mid-June now to mid-August. So it's been about the same time period on the rally as on the way up as the downtrend on the way down. We're very close to this 80 psychological support here, which should be very key. And we feel that from a dollar perspective, we'd be willing to buy the dollar on a move back above this 200-day moving average. And that would be a move above this consolidation area from last week. So buying the dollar on a stop at roughly 81.35 and risking below last week's low would be a risk below 80 at that point. And if we did see that happen, then at that point you could probably feel pretty safe that this crude oil trade is going to work at the same time. If that dollar does start to pick up above 80, you're going to see some selling pick up here. And last week we had a small build in the refined product inventory. So this is unseasonal. Right now we shouldn't be seeing builds in the gasoline inventories, but we are. And we had some disappointing jobs data last week from the non-farm payrolls. So with the economic data and the unseasonal builds that we're seeing in the refined products, we do feel comfortable taking a stab at the short side of the crude oil market with a well-defined risk. And our objective is going to be down near the lows that we've had. There was a good area of support that was built near $76 a barrel. And it's actually right around 50% retracement of this move from our May lows to our recent highs. That's going to be where our profit objective is. Depending on what the market sentiment is at that point, if we do get down there, we will possibly look to go long with a short risk below this low right here, which I believe is 75.85.